Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're now here on Monday, the 16th of September, 2024, and the time right now, 5:20 p.m. Central Time. I'm early. I have an evening engagement that I have to take care of. We're 2 days away now from the Fed meeting. The market is going back and forth in the Fed futures. Now 65% probability they'll go 50 basis points rather than 25. So it's just back and forth action. As I've said, to me, it doesn't matter. And you'll say, well, why not? And the reason is the Fed's on a rate cutting cycle. They've announced it. Now it just starts. I get always nervous. You buy the rumor, sell the fact. And once it starts, okay, if they go 50, is that going to spook the market? I doubt it, because what they'll say is they want to get ahead of the labor cycle and want to assure that the market's going to have softness there. They still think inflation is falling, but they can go that and trim back. They can also go 25 basis points and say, well, we don't think we're really behind the cycle, but if we are, we'll see that in the next labor report. And if that comes in weak, we can always up the ante and go quicker on the next cuts. You pick it. It's like going out to dinner and you're sitting there and you're going, oh, which one of these should I have? That's basically what it is. All right. Energy markets getting a little bit of a bounce tonight. The Dow right here, new all-time highs were made, but remember, it's 30 stocks. You're not getting that in the S&P, the NASDAQ, or the Russell. In the metal markets, they're acting pretty good, but if you watch my metal report, you understand my concerns there. Tomorrow, you're going to get the Red Book Group coming out with their weekly retail sales data at 7:55. You get the Federal Reserve, they're coming out with the monthly industrial production and capacity utilization index 20 minutes later at 8:15. National Association of Home Builders, this is the index, not existing or new home sales. No, it's an index. It's not as important to me. The July business inventories data comes out Tuesday at 9 o'clock. We'll get the API numbers at 3:30. And today we had in the morning the New York Empire State Manufacturing Survey. This was a blowout. Nobody I know was looking for anything like this. 11.5, they were looking for 3.9. That was the consensus of analysts. In the prior month, they were looking for a little improvement from a negative 4.7. So from there, they were looking for up 0.8 of a point, not to go up dramatically, all right, and go up 5 times, 4 times that multiple. But it did, and it wasn't a fluke. You saw things improving in other parts of these. These numbers are all improvements as you go through them. Is it a one-off or is it something else? That's going to be the big question that everybody's going to look at. All right. So Intel had a good day, kicked up one of the indices. It's about to get replaced. Okay, I can live with all that. The company needs a break. It's just been under terrible thing. And the same with Boeing. That keeps getting hit. Eventually, there won't be bad news to those. When we look at the S&P, you can see how the market is held. You can't change what history is, this number. Now, it's interesting. If you go to my metal report, which I'll talk about a little later, I talk about the probabilities, the days in front of the report. Let's say 5 days in front, 10 days after, what the market has historically done. But there's even a more important thing. In presidential years, if you look at Labor Day, wherever the close is, the market finishes higher 6 years in a row, or 6 election cycles in a row. That's what I should say. That's quite a bit. Something going on there that the market likes. So obviously, I'm looking at things for reasons that I think the market's going to go up again, not down. I've said that. I think the market will get a Santa Claus rally, but I'd love to see September weak. You have to get some of this out of the market. Another thing's going to happen, and pay attention. You're about to switch over from, is the Fed going to cut rates, to the thinking, what do corporate profits look like? We're going to switch away. They won't have that mask to hide behind them because the Fed will be behind the market now cutting the rates. how is the profitability? That's what you're going to be looking at. Get ready for that shift in the market. When you look at the charts here, you haven't gone up for a new high. What you have done is you've reinstated the bull trend when you had higher lows, higher highs. The battleground had been the 18-day average. I thought we would fall back to it more than it has, in all fairness, but it hasn't gone for a new high yet. And the Bollinger Band comes in right at these old highs, saying that the market could have a problem there. Let's assume it gets there tomorrow. Do you go through the Fed report, and what's the reaction? Remember, you got to be careful. Could it be the Biden rumor? They're going to make a 50 cut, they get it, and market gets spooked and something else happens. You always got to be thinking that. You're overbought, so if you got there, yeah, I think the pros would dump. When we get to the NASDAQ, this is what I thought the S&P would do. Fight a little bit more at this moving average first time you get there. And notice it's fighting right at the 100-day and the 18th. Is this going to fall apart if you take out the lows here and go down again and keep it where the 18 is under the 100, or does it flip over? And that carries the market up even higher. It is overbought, so I can't tell from that. Here's the market that made the high, but you're right into the Bollinger Band and you're not embedded. For my money, and you probably say, what's the difference? I think the pros come out at the Bollinger Band right now. In the Russell, couldn't get up to those other parts, got lower low, higher high. If you go up, I see the resistance at the band. Then we get to bonds and notes, which have the embedded readings. So these are more bullish, all right? We know that. They're riding the Bollinger Band. Then they stepped back. You can see that in the 5-year, and it's just staying under it. Is it going to fall backward is the big question you have to ask yourself. If you see that red line, which is right now at 87.25, get under 79 and close under it, you're probably going back there. Without that, you're still embedded. I'll come back here and look at the 10-year. And you can see that you're embedded here too. So it's the same identical story for both. When I look at the dollar index, you're in a vertical price decline. You peaked out here. Notice I've moved to the December now. So you're down 150 points from this recent high that the market made. I wouldn't be surprised if it finds some support at the 112 level. I had, for my subscribers today, a number to take some money off the table because they have been fortunate if they followed. They've been short from the SEP. We rolled into the D's on Friday and caught this additional play today. But I think you're at the first step of taking money off the table. And I said that to them, and I told them where I thought they should do it. That for some of it, said keep half, and then we move stops and so on. And the euro, lower highs, lower lows, but I wouldn't be surprised you fight here a bit. Now, if you can clear that high, it doesn't mean you're suddenly rip-roaring bullish. That would give you a higher high and a lower low. Again, these are not the easy trend trades. Same in the pound. If it gets back, the Bollinger Band should be the resistance. You're over that. This week, we get the Bank of Japan and the Bank of England following the U.S. Well, they'll all be right about the same time frame, so you got to keep your eye on things. And I'll be talking about that tomorrow. Lower low, higher high in Bitcoin. I don't know. I don't see anything. I saw a bear market rally up to that, and it sort of faltered right there. Then we get to the energies, and, you know, momentum to me is not everything, but it's big number, big part of what I do. You lost the bearish momentum. So before you get back down here, I think price and the 18-day average could come together. The same now in the Rebob gasoline. You're still in the heating oil into the bearish. Boy, is that Rebob that I did there? No, that's crude oil. I've got the wrong title on it. This is crude. I didn't think that was gasoline at 69. I wouldn't be surprised if you hit there. I can't believe I put the wrong title on it. I was hurrying in the afternoon because I've got to be somewhere in about an hour. My mistake. I apologize. I did the same thing this morning in gold. I had a Feb gold when it should have been a decent. One of my subscribers was kind enough to remind me. I fixed that already. I'm in a hurry right now. Higher lows, higher highs, right into all this, and overbought. I am looking for eventual failure in this market. I'd love to see it up here and turn down because you get into those seasonals that break at the end of the year. But right now you can go up, okay? Are we using that gas? Well, maybe a little bit for the heat we're all getting. The Midwest, I don't know if you're looking at the temperatures, but it's unbelievably warm. This is summer weather. We're going to be 90s again in Chicago. We haven't had rain in days. The lawns are turning brown. The farmers love it for corn. It helps them because they don't have to, if you will, dry as much. That saves some money, but it could hurt their soybeans because this can impact yield. This is a crucial time for soybeans. You don't want it too dry. That can definitely create a problem and snap like that on you. You've got to be careful at this time of the year. So you put it all together, you try to come up with a game plan, and I've got my gold report out there for you. And if you like gold, I covered gold, GLD, GDX in this. So everything's covered all the way through there. I talk trend and chart analysis. My charts will look like that. I'll give you the comments I'm seeing. I'm going to talk seasonality there and where you go. Just the way I've been talking seasonality here with what happens on Labor Day. Well, I lead you to the election, and I lead you right now to where you're at. So how do you get all this? Because it's time sensitive. On Wednesday, it goes off our website. You go to iraepstein.com. On the top left, you will see, it says big part of it, the gold market. You can go to research. It'll be in there. Or you can move your cursor up here to the top. You'll see a cursor. If you're a paid subscriber already of my research, it's in your member login area. Just go there. I'm Ira. I'll catch up with everybody in the morning. As you can see, we got a heck of a lot of data. I'll talk to you then.